Welcome to the Deep Dive. We take interesting sources, unpack them, and help you get informed fast. This week, it's all about crypto and blockchain. Specifically, a really packed week, September 7th to 14th, 2025, our mission. To dig into these headlines showing that the lines between traditional finance, TradFi, and crypto, they're not just blurring, they seem to be dissolving. We'll hit on big institutional moves, some surprising market stuff, new privacy tech, how it's being used in the real world, and yeah, unfortunately, a worrying jump in crypto crime. Get ready for some, hopefully, aha moments as we dive into what this all means for digital assets and, well, for you. Okay, so let's unpack this first big theme. It really jumped out this week. The embrace of crypto by traditional finance. It feels like it's moved past talk now.
Definitely. It's significant investment, real integration happening.
Yeah, first up, Nasdaq. The Nasdaq, a
Yeah.
huge name in traditional markets. They announced a pretty substantial $50 million investment in the Gemini exchange.
Yeah.
But it's not just an investment, is it? This partnership means Nasdaq is going to offer Gemini's custodial services directly to its own institutional clients.
Exactly. And custodial services, just so we're clear for everyone, that's basically like a secure vault, right? A trusted party holding the crypto assets?
Like your bank holding stocks, but for Bitcoin or Ether.
Precisely. So having Nasdaq offer this directly, it's a massive step. It's not just dabbling.
No, it feels like deep integration. It signals, maybe, a new level of legitimacy, access for the really big money players.
Absolutely. It's fundamental. It's not just about the cash investment.
Oh, yeah.
It's Nasdaq basically saying we trust the operational side of this crypto service provider. Offering Gemini's custody means they're weaving crypto plumbing right into the core TradFi infrastructure.
Ah, okay, so plumbing, not just visiting.
Exactly. That's the key insight. Building foundational bridges, this isn't just speculative anymore. It's infrastructure being laid down.
And speaking of bridges, building on that point, we also saw Figure, the blockchain lending firm, they went public. On the Nasdaq, actually.
Yep. Successful debut, too. Strong stock performance right out of the gate.
Which seems to indicate a real growing appetite from investors for, publicly traded companies that are actually built on crypto tech.
It does. It's not just about one company IPOing. It's the mainstream market, putting its stamp of approval on a business model built on blockchain.
So does this signal maybe a turning point? Are we going to see fewer, purely speculative moonshot projects and more companies with actual revenue models going public?
I think it points that way. It's a validation of the model, not just the company. For years, crypto felt very speculative.
Right.
Figure's IPO on Nasdaq shows investor confidence in tangible blockchain applications, real businesses. It sort of de-risks the space a bit for others. And it shifts the narrative, doesn't it? From just tech innovation hype to hopefully sustainable business growth.
It definitely adds to that feeling of increased stability, maybe credibility for the market. When you see these institutional moves, Nasdaq, Figure,
Yeah.
how does that shift your own thinking, perhaps, about the long-term view? The mainstream perception. Okay, now this is where things got really interesting this week. The actual market movements.
Yeah.
Some predictions that definitely raised eyebrows.
The price action.
Both Bitcoin and Ethereum.
Okay.
They had a pretty significant rally. And it seemed triggered by some encouraging inflation data, a key consumer gauge reading.
That's right. Investor optimism seemed to jump. There was this feeling that maybe the Federal Reserve wouldn't stand in the way of a potential rate cut.
Which tends to boost what they call risk-on assets.
Exactly. Assets investors flock to when they feel more confident, more willing to take speculative chances. Crypto often falls into that category.
Right. And then on top of the rally, we got this really bold forecast. Dan Morehead, prominent crypto investor analyst.
He's got form, too.
He does. He apparently called Bitcoin's rise to $120,000 earlier in 2025. Now he's predicting it could double in the next year, trading about $230,000.
Wow. That's ambitious.
It is. And his reasoning, he points to that increasing institutional interest we were just talking about, and what he sees as a more favorable regulatory environment.
Okay, so Morehead's got the track record, and those factors, institutional interest, regulation, they are strong tailwinds, no doubt. But I just, gently caution that such a rapid run-up always brings volatility risk. These prices are reacting to macro signals now, just like traditional markets.
Sure.
And predictions this big, well, we've seen them before. And the regulatory side, while maybe improving, it's still not exactly set in stone, is it?
Good point. Are we maybe underestimating the potential headwinds? Or do you think there's a genuinely clear path to that kind of number, $230K, given where things stand?
That's the million-dollar question, isn't it? It really makes you think how closely you should tie your understanding of crypto trends to those wider economic indicators.
Yeah. And when you hear these massive predictions, what factors do you focus on? Is it the analysts' past calls, the market conditions right now, or that sort of evolving regulatory picture?
Okay, moving beyond the market buzz and big institutions, the actual technology itself, it keeps evolving, pushing boundaries, but also reminding us of the challenges that are still there.
Right, the tech frontier.
The Ethereum Foundation, they announced a new privacy roadmap, end-to-end privacy for the network.
Focusing on key areas. Private reads, private rights, and proving. Things that happen under the hood but are crucial for confidentiality.
And the goal here is what? Significantly better user privacy.
That and potentially unlocking totally new uses for the blockchain, especially for businesses, institutions, places where confidentiality is non-negotiable.
Yeah, that makes sense. Because for a lot of traditional companies, the fact that public blockchains are so transparent, that's been a barrier, right? Absolutely. If you want businesses to really come on board, they need that confidentiality layer. Think about sensitive data supply chains, financial deals, maybe even health records down the line.
So enhanced privacy isn't just a nice-to-have, it's potentially critical for wider adoption.
I'd argue it's paramount for certain sectors, yes. It could unlock use cases that just haven't been feasible before because everything was out in the open.
Okay, but then, on the flip side of innovation, the cautionary tale, Kinto's shutdown.
Ah, yes, Kinto, an Ethereum Layer 2 network.
And for anyone unfamiliar, Layer 2s are basically ways to make Ethereum faster and cheaper, off-chain solutions.
That's the idea. They bundle transactions off the main chain to improve efficiency, but Kinto officially announced they're shutting down.
And the reason? A $1.6 million exploit, a hack, that happened back in July.
Yeah, a really stark reminder, isn't it, of the security challenges, the risks that still come with new DeFi, decentralized finance projects, and these blockchain innovations.
It really highlights that tension, doesn't it, between wanting rapid innovation and needing really robust security.
It does. As the whole ecosystem pushes for more features, more users, mainstream adoption, how do you balance that speed with security? Especially when there's so much money involved.
That is the tough question. You've got this amazing promise, like with privacy tech, but then these vulnerabilities keep cropping up.
It's a lot of pressure on developers, on the project teams to build security in from the very start, and frankly on users to be careful.
So for you listening, knowing these exploits are still happening, what level of risk are you actually comfortable with when you look at new or emerging DeFi projects? All right, let's zoom out a bit. Look at how crypto is actually being adopted around the world and how different players are approaching it. It's quite a diverse picture.
Definitely not a one-size-fits-all approach.
First, Dubai. A pretty significant move for real-world use. The city announced residents can now actually pay their rent using Bitcoin.
Wow, rent payments. That's tangible.
Yeah. Part of their bigger push, it seems, to be a global hub for digital assets and blockchain. Real utility.
That is a huge statement from Dubai. They've clearly decided to lead on digital asset integration, making rent payable in Bitcoin. That's about as mainstream as it gets for a specific use case. It's policy, a national strategy.
Right. A totally different vibe. Ant Group.
The Chinese tech giant.
Their CEO, Han Jinyi, was at a conference, the Inclusion Bund Conference, and basically reaffirmed their long-standing policy. No virtual currency issuance, no speculation.
Sticking to their guns on that one.
Yeah, their focus seems to be on compliance, building the underlying tech infrastructure, not trying to disrupt things with their own coin.
The contrast with Dubai is stark, isn't it?
Totally.
Ant Group, massive fintech player, taking this super cautious infrastructure-first approach, probably driven by regulation in their region, and maybe a focus on long-term stability over quick disruption. They're playing the long game. Building the rails, you could say.
Building the rails, yeah,
Right.
without jumping onto the potentially volatile train itself.
Nicely put.
And then thirdly, there's the grassroots level. The Ethereum community is buzzing. September's packed with conferences, hackathons all over the world.
Yeah, ETHWarsaw, ETHIstanbul, developers, enthusiasts getting together.
Discussing the network's future, showing off new projects. It feels like innovation bubbling up from the ground.
That's the core of decentralization, really, that bottom-up energy.
So you've got these three distinct paths emerging, right? Direct utility from a city like Dubai, cautious infrastructure building from a giant like Ant Group, and this vibrant decentralized developer scene.
It's fascinating to watch them all unfold at the same time. Which path do you think ultimately wins out? Or maybe they all coexist. Which one seems most effective for real, lasting global adoption?
It does paint a really interesting picture of how crypto might weave itself into society.
Yeah.
Do you think direct utility, like paying rent, is the most powerful driver? Or is it the behind-the-scenes infrastructure? Or maybe it's the unexpected breakthroughs that come out of those hackathons. Each has its own momentum. But unfortunately, there's always the shadow side, especially with fast innovation and more money flowing in. This week brought a really stark reminder of the security problems.
The crime report.
Yeah, a new report showing a huge surge in crypto crime. Just in the first half of 2025, the scale is kind of staggering. An unprecedented $3 billion stolen.
$3 billion.
Across 119 verified hacks.
And the really chilling part of that report?
Was that nearly a quarter of the stolen funds were laundered before the hacks were even made public?
Right. That speed is terrifying. It shows how sophisticated, how organized these operations are now.
It really is alarming. The scale, yes, but like you said, the speed, the sophistication, it's deeply concerning. Laundering funds before anyone even knows they're gone? That's a massive challenge for security teams, for regulators.
It's a constant arms race, a cat-and-mouse game. And the criminals are definitely getting better, faster.
So as the industry keeps growing, attracting more value, how do we fight back effectively? How do we protect users systemically against these advanced threats? Are the current defenses just not enough? Do we need a whole new approach?
That is the critical question. Because individual users being careful, while important, it's not enough against this level of organized crime.
So given this surge, what precautions do you think individuals really need to prioritize right now? And looking bigger picture, how does the industry itself need to adapt to really tackle these attacks and, crucially, protect user trust? And that just about wraps up our deep dive for this week, September 7th to 14th, 2025. It feels like the big story is convergence, doesn't it? TradFi isn't just watching anymore, they're actively jumping in.
Definitely participating.
We also saw that constant push on the technology front, the different ways people are trying to bring crypto into the real world, and yeah, that unavoidable need to strengthen defenses against some very clever threats.
It's a dynamic space, full of huge promise, but also very real challenges.
Absolutely. Demands attention, curiosity, and definitely critical thinking.
It really does. And as we see TradFi and this digital world keep intersecting, the big question moving forward isn't just if they'll merge more, but how. What new ways of exchanging value might pop up? Maybe entirely new industries built on this convergence.
And how do we make sure they're built solidly? On innovation, yes, but also on security.
That's the challenge ahead.
Well, thank you for joining us on this deep dive. We hope you're walking away with a clearer, maybe more informed view on where crypto and blockchain might be heading. Until next time, keep exploring, keep asking questions, and stay curious.